Hello, and welcome to RSR Rundown, a series of helpful videos created to assist you in navigating student loan repayment by Ready Set Repay, the student loan repayment initiative of the Oklahoma College Assistance Program and the Oklahoma State Regents for Higher Education. Today, we're talking about student loan interest. Student loan interest, like interest on any other type of loan or line of credit, is a fee charged by a lender for using borrowed money. Interest can vary greatly on student loans depending on whether you take out a federal loan or a private loan, or if the loan is subsidized or unsubsidized. So it's important to understand how interest is charged in order to set yourself up for financial success during and after college. There are two types of interest, simple and compound. Simple interest is charged based on the principal balance of the loan, or the original amount borrowed. Compound interest is based on the overall loan balance. This includes the original amount borrowed, plus any interest charges that have accrued but haven't been paid. For example, if you took out a $10,000 loan with a 5% annual interest rate, and repayment was calculated with simple interest, the loan would accumulate $500 in interest every year. If the $500 in simple interest is left unpaid, it will be added to the loan balance, or capitalized. Interest capitalization occurs when unpaid interest charges are added to the principal amount of your student loan. Interest is then charged on that new, higher principal balance, increasing the overall cost of the loan. Using the same example of a $10,000 loan with a 5% interest rate, if the loan charges compound interest, it will accumulate the same $500 in interest charges during the first year. However, if that interest charge is unpaid in year 2, it will be capitalized, and the loan balance will increase to $10,500, causing the interest charge on year 2 to increase to $525. This will continue for the life of the loan if the interest charges remain unpaid. It's also important to note if you take out a private loan in college, be sure to speak to your lender to get the most accurate explanation of how they will calculate interest on your loan. Private loan interest rates and assessments may vary from lender to lender. With federal student loans, depending on the type of loan you're qualified to borrow, you may receive some interest benefits. For example, interest on federal direct subsidized loans, loans provided for students with financial need, is paid by the U.S. Department of Education while the student is enrolled in college at least half-time, or during periods of deferment. For students with unsubsidized loans, in most cases, interest charges will start to accumulate as soon as the loan is disbursed, and will continue to accumulate if left unpaid while the borrower is in school, in their grace period, or during an approved time of deferment or forbearance. Fortunately, there are several ways you can reduce the amount of interest you'll pay on student loans. First, consider making interest payments while you're in college and during periods of deferment or forbearance. This will prevent the interest from capitalizing over time. As you can see here, Amy and Sue both borrowed $24,000 in unsubsidized student loans. Sue paid the interest on her loans while in college, but Amy did not. So when Sue graduated, she only owed the original $24,000 she borrowed, while Amy's total balance due after graduation was $33,752. Amy's interest had been capitalized, and she owed considerably more upon repayment than Sue did. You may also consider choosing a shorter repayment term. If you can afford to pay your loans on the standard 10-year repayment plan, you'll spend less on interest by not extending your repayment period. You can also make extra payments whenever possible. This will speed up loan repayment over time. Or consider refinancing your loans into one loan with a lower interest rate. Another option is to research loan forgiveness programs you may qualify for, like public service or teacher loan forgiveness. Thank you for joining us for this episode of RSR Rundown. For more student loan management tips, check out our website, readysetrepay.org.